We're here in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. I'm joined now by Jim Bichard, who's Global Insurance Leader for PwC. Jim, it's good to see you again. Welcome.
Thank you very much for having me back.
So, Jim, great opportunity to talk to you and gain some of your insight into the global insurance and reinsurance industries. Insurance and reinsurance seem to have been bought in more or less the same way for hundreds of years. To what extent can we expect that to change in the future?
Yeah, look, I think the way insurance is transacted, reinsurance is transacted, you're right, is very similar. One of the topics we talked about we had some briefing sessions this morning was how technology is going to change that. And there's maybe a couple of dimensions of that. The first is so much of the way transactions happen right now could already be automated with existing technology. So if you think about just automating and digitalizing the reinsurance process, I think you wouldn't need big leaps in technology. And it's already used kind of at the edges, but it's still largely a person-to-person process with some technology kind of augmenting it. I think it's not hard for that to imagine that being flipped over where it's primarily a digitized process with a bit of human interaction. And I think it's a relationship business ultimately. And I think that's one of the things that binds together and makes reinsurance kind of work as an industry. But I think you can still have that human interaction, but with a much, much larger, digitized component. I think the other thing to think about though is the product is also still very similar to what it always has. We've got annual policies, and whether it's treaties or individual risk covers. And yes, we've got more structured products now, but it's still largely following a similar format, and it's still around protecting against a loss. And we see the way that the industries that we are serving, whether it's automotive, manufacturing, health, those are all emerging and evolving as a result of technology. So how does insurance and reinsurance then cater for that? And that includes different products, much more on the liability side, much more around prevention and prediction, not protection, much more use of analytics, and therefore much more use of data. So I think all those things could really revolutionize the way what reinsurance looks like in terms of a product, and also, as you say, the way it's transacted.
And the way it's distributed, potentially.
Absolutely, yeah. I mean, because the value chain also becomes more blurred. The value you're adding to an end customer, what a primary insurer is doing, what a broker, the MGA is obviously a very important part of that sector. I think having an industry specialism we see as being really important, because you always need to understand your end customer very well, but everyone in the value chain needs to have that understanding, not just the person who's facing off most directly to them. So I think absolutely distribution as much as all the different parts of the carrier chains, if you like.
So you talk about technology, you talk about data. Now, inevitably, mind turns to AI, and a lot of talk here about AI, about some of the opportunities, about some of the challenges as well. What's your take on those?
Look, I think AI already exists in a lot of what we do. I think there's probably quite a big difference between analytics and how that's used already quite extensively. You think about in any modeling process, which is really fundamental to a lot of reinsurance. AI analytics are a really important part of that. I think generative AI, large language models we're still really quite early on in how we're including those in the value chain and the process. As I said, I think the technology already exists in many cases. It's just, have we found the right things to apply it to? We don't need big leaps forward in technology. It's been so quick even the last 2-3 years. Risks, definitely, we have to always be mindful of data protection and what we're using the data for and the right purposes. But I think that's far, far outweighed by the opportunities. So yes, there is always a lot of talk about AI. I mean, one thing I think for me that I've seen more recently in conversations with clients is it's seeing how individual organizations and leaders really push the use of AI. It's not the technology is not really the limiting factor. It's how focused organizations are about really leveraging it for competitive advantage and for the benefit of their customers. So actually the leadership component is just as important as what the technology can do. That's not really the biting constraint,
So we're here in Monte Carlo, obviously lots of conversations about the future shape of the reinsurance industry, but I guess more urgently is where we are in the insurance cycle, what the prospects, the immediate prospects are. AM Best has still got its positive outlook on the reinsurance segment. How does that tally with what you're seeing on the ground?
Yeah, I think in your outlook, you've weighed up the tailwinds and headwinds, as you call them. I think that's a really good analysis that you've done. I think most people would agree on the list, if you like, of the positive factors. There's still relatively good adherence to terms and conditions. Pricing still probably quite adequate, even maybe if it's not quite as good as it was. I wouldn't sort of list everything out. And from if you like, a headwind side, okay, the risk landscape has probably never been more complex, and also there's all the macro issues, geopolitics, etc. But it's all about how much weighting you put to those lists. So people would probably agree on the list, and it's just how much weighting do you put on if you like, the positives or the less positives. I think positive is perfectly justifiable. You could equally say, well, I'll put more weighting on the negatives because we tend to be a bit too optimistic at this point, and then in a year's time realize maybe it wasn't as good as we thought. But I think you can absolutely support the assessment. I guess the trick is how disciplined we are at this point in the cycle, and also how we understand it's not about all prices being better or worse or terms and conditions. It's much more about the particular risks that we're facing, and there's still plenty of lines which are suffering quite a lot of, in some cases still adverse development. Others obviously a bit more benign more recently. So it's more of a blended picture, isn't it?
Wherever we are in the cycle, I mean, it's inevitable that there will be softening eventually. What does a softening market? How might a softening market affect the reinsurance landscape?
I think there'll be some movement of capital towards the lines where there's more, if you like, adequate rate or seen as more positive rate. Although, notwithstanding, that's all in the context of risk appetite. Because if for example, a casualty class is seen as having better pricing, but you don't have the capability or it's outside your risk appetite, I don't think that's a good strategy just to sort of swing. But I also think what we'll see is just more M&A, and we've seen the beginnings of that. I think now we're probably entering an M&A cycle at the same time as a pricing cycle. There's still a lot of capital. I don't think there's excess capital, but there's a lot of capital that still wants to come into the industry, and the industry itself is well capitalized and has produced good returns for the last couple of years. So they've generated capital. So there is probably a lot of capital to be deployed that's going to want to seek a return, and maybe some of that return is through deals. So I think we're probably going to see more consolidation. I think we're also going to see more capital flowing into other parts of the distribution chain in insurance and reinsurance.
So, Jim, one final question, if I may. What issues are being overlooked today that are going to be most important in the future?
I'd probably come back to that leadership point. I think, you could talk about the old phrase, the good years get better and the bad years get worse. And so have we really assessed where we are, for example, on some of the lines of business that aren't performing well? Are we going to wish that we'd been a little bit more pessimistic? You could take that view. You could talk about, are we thinking enough about the impact of data, and are we underestimating how quickly it will change things, either from a cost perspective or from a productivity point of view? But I would say all of that comes together with leadership. So did we focus on the right things at the right time is ultimately a leadership decision. So I think you've got to probably make an assessment at this point in the cycle and then be quite decisive and then stick to it. So that would be my perspective. It's probably about leadership.
Jim, it's always a great pleasure to talk to you. Thanks very much indeed for your time.
Thanks for having me back.
For AM Best TV, I'm Richard Banks.